Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And something I have been asked a lot about recently is, why do I say the Fed broke housing? Well, I think there's a couple of things we need to talk about. We need to talk about demand destruction, and we need to talk about supply destruction. But before we get into what I believe are the four big areas of demand and supply destruction, let's step back and let's look at the housing market pre-pandemic. And to do this, all you have to do is do a quick Google search. If you'd like to check these numbers, this is where I grabbed it, is look at total housing sales. And I went back as far as 2016. This means existing home sales and new home sales. So both categories. You have to be careful. Sometimes they're just reporting existing home sales, sometimes just new home sales. I want you to collect those together. So let's look at the story before the Fed broke housing. So when we look at the housing market back in 2016, we did a total of just over 6 million transactions, buys and sales. Then in 2017, we did 6.12 million sales. 2018 is an important year. If you're in the housing market, you know at the end of 2018, the market got soft. And in some markets, it stopped. Why? The Fed was raising rates. The Fed got, some would argue, a little aggressive and slowed the market down. But again, we still did 5.96 million sales. Then in 2019, the last year before the Fed got involved in the housing market, we did 6 million sales. So the deviation from 2016 to 2019 is a whisper. It's nothing. Now, the first year the Fed gets involved, pandemic, we shut down the economy, we lower rates to nothing. You were probably getting interest rates in the threes at this point. We jump almost 10%. We do 6.5 million sales. 1 year, an extra 500,000 units sold. Then in 2021, we not only did 6.5, we added 400,000 sales. So in 2 years, we did about 1.4 million extra, right? This is going to be important because those 1.4 million extra sales are going to come out of the future supply and demand. We will talk about it in a minute. So again, I think this clearly points to the Fed sticking its nose into the housing market, giving you interest rates, some of you below 3, most of you below 4. This is our baseline. So now let's talk about the Fed and how they broke the housing market. I think there are 4 big categories of transactions. There are lots of others, but I'm only worried about the big 4. So let's talk about first-time homeowners, right? First-time homeowners from a supply and demand perspective. The S is supply and D is demand. Well, first off, on the demand side, we clearly are already seeing demand destruction. In fact, that is what the Fed's goal is. The Fed is trying to lower demand for all things, all assets, stocks, cryptos, housing, other things. They are raising rates, so it is more expensive for you and businesses to borrow money. The Fed got involved. Everybody could borrow for nothing. It was a big party. Too low, too long, housing broke. Now let's talk about supply. Well, you'd be living under a rock if you didn't understand that supply is constrained as well. So first off, a first-time home 6 months ago might have been $300,000. Given where rates are and the payment, first-time home buyers usually buy on payment, the payment impact has dropped 30 to 40%. So where they used to qualify for a $300,000 home, it's more like $240,000, $250,000. So again, the supply is going to go down because builders can't build them. Also, builders are slowing down, right? They can't find people. They can't find supplies. They have dead days. They see rates. They are seeing cancellations. So I believe first-time homebuyer demand is going to go down significantly. When you compare it to these two outlier years, I don't know, this could be down 30% demand. Supply, again, new homes are about 600,000. First-time homebuyer new homes are probably a fraction of that. So let's just say this is down, I don't know, 10%. These are opinions, of course. Feel free to follow along, do your own numbers, and see what you come up with. Next, the move-up buyers. This one's interesting. Again, go back here. We did an extra 1.4 million transactions above norm in 2 years. A lot of these people that would be move-up buyers today already did it, right? So the demand for someone moving up is going to be down. I don't know how many, but let's say it's 20%. Also, on the demand side, I have heard from so many people, Michael, you're right. Supply destruction is going to happen. We bought our house in 2018. We're up 50%. We're sitting on $100,000 of equity. But we just looked at the next home up and we won't do it. Our interest rate's 2.8. We're going to be here for 30 years. We're going to pay it off. That 30-year mortgage that the Fed gave us for 2 years is just too long, and it broke housing. So not only are you going to see demand go down, I think this is going to be a big hit to supply. Move-up buyers are going to fix their home. They're going to take out a home equity line and add a bedroom, add a pool, whatever it is. They are not selling that that home with the 30-year mortgage, and they shouldn't. Some of you will turn it into an investment property, which you should. Rents are still going up. We are going to see a huge drop in move-up buyers. I'm going to say at least 50%. And it might be more than that. Why would you trade a 2.8 mortgage for a 5.8? It doesn't make sense, especially in such a little window of time. It is going to be bad. Next up, second homes. We have already seen the impact of second homes. I've already heard from real estate brokers about the second home market. And supply could actually go up. There are some people in second home markets that maybe tried Airbnb or VBRO or whatever. Maybe they bought it, they don't like the weather. I do think supply of second homes is going to come up. Second home markets absolutely could see some price destruction if you are in one of those markets and supply comes on right when demand falls. Because I think demand is going to fall. Because again, if you wanted a second home, wouldn't you guess you already bought it? If you are lucky enough to have the equity or the job or work from home or whatever, you're not going to look for a second home now. You would have looked for a second home last year or the year before when the economy shut down. A lot of these second home buyers already bought. So the demand is going down. And, oh, by the way, the supply will go up. I think demand is going to go down by 40%. I think supply could go up by 20%. And then investment properties. This one is interesting. This is where I play. This is one rental at a time. So let's talk about supply first. Are we going to sell? I would argue most of us, if we didn't sell already, we won't be selling because we are sitting on low rates and rents are increasing. Cash flow is going up. We would maybe 1031, but there's not a lot of inventory, and I think the apartment market is in trouble. So maybe we sell in the future, but we are not selling now. Why would we? So again, I think the supply of investment homes are going down. If you already sold, you probably already did. We'll just say this is little, about 10%. Demand. I think demand for investment properties is going to go up. I think this could go up 20, let's just keep them round numbers. I think demand's going to go up 20%. I believe what we are going to have happen, and I've said this for weeks, if not months, the stock market is resetting itself. We are seeing earnings collapse. We are seeing multiples collapse. Last time this happened, 2006, 7, 8, people said, I'm never going back. Crypto burned me. Stock market burned me. I'm never doing it. I want a physical asset. In fact, if you go back and read my book, I love it in hard copy myself. In hard copy, you go back and read this story. I was that stock market investor who made a lot of money and then lost a lot of money. So again, I expect that to happen again. You're going to collect your chips. My almost 200 became 40. I lost 80%. Walked into a bookstore, found Rich Dad, Poor Dad. I suggest buying my book, One Rental at a Time, link below, to tell you what happened for 15 years, because it's an exciting ride. But again, I think we're going to see increased demand, but we're only going to do great deals. People that follow me know that I talk about a buy box, daily discipline, only writing good or great offers, no alligators. All of these things you will pick up on my channel, or better yet, in my book. So again, I think the Fed broke housing. One, we pulled forward 1.5 million units that won't transact. And we have crushed the move-up market. We have crushed second home market, first-time home buyers. We are going to have supply demand. So what does this mean? Let's put it over here. 2022. Housing is going to be down 15 to 25%. 2023, peak to trough. So again, we'll look at 6.9. We will be down 25 to 40%. Yes, we still will transact. Yes, there still will be millions of homes. Yes, people will buy and pay cash. All of those things. I'm not saying the housing market goes to zero. I'm saying transactions fall, let's call it 20%. So 6.9 times 20% is, what is that? 1.714, call it 1.35 million lower this year. So that would put us at about 5.6. Is that right? I have to do the math later. I think it puts us at about 5.6 million, and we're almost there already. I think I saw housing numbers last week. We're at 5.86 million, so we're already down. And again, in 2023, we're going to keep going lower. The Fed broke the housing market. Take care. Let me know what you think. Bye.